to. It's basically just going to be like people that have questions or want to like follow up on anything you touched on in the interviews, or just like, I don't know, get to know you a little better.
Cool.
This is just an opportunity for them. They all watched your video, so they obviously are here for a reason and want to reach out. So, and obviously me and Phil have some questions too, if anyone's not feeling up to the task asking the first question. So
yeah, and these questions can be about anything. We've had 3 of these networking sessions over the past 2 days with Grace Keating, Aaron Horn, Max Betchold. So they've ranged from fairly formal to pretty informal, just about their college experience, life after school. And yeah, I thought all 3 have been pretty good so far.
Cool.
Yeah. I don't know, Caroline or Dave, if either of you guys want to ask a question first, feel free.
Question?
Yeah, go for it. Oh. Can you guys hear David?
I think we lost him.
Oh, all right. David, I don't think we can hear you, my man. All right. So, Caroline?
Yeah, hi. My name's Caroline. I just kind of wanted to ask a couple questions about kind of specifically what deals you guys work in. So kind of if you see the whole deal process go through, if you're just specifically kind of in the underwriting team. I worked for a real estate investment trust in Phoenix, Arizona this summer. So I just kind of wanted to hear how that was different or similar to kind of what I was doing.
Sure, I can kick it off.
Okay.
So yeah, Michael Lane, I'm an analyst at East Still Secured, and we are capital markets brokers. So, you know, my primary role is to do the underwriting on deals. Always, no matter if we're trying to sell a building or put financing on it, or even like raise joint venture equity, basically finding a partner to provide more money for a project. No matter what you're doing there, you got to figure out what it's worth. So that's kind of step 1. So that's really what my task is, and that's running through all the models, running that in Argus and then in Excel, doing all that underwriting process. But, you know, in my role, I kind of all the knowledge that you build doing that, you know, you're the one that really knows the rent roll very well. So I see the deal process through. So I'll take, for instance, the sale of a building. It's kind of what we do, I would say, the most. In that case, you know, I'm there from when we get the initial due diligence from someone like Wade, if they were selling. I know he's in acquisitions, but, you know, we would get that, underwrite the deal, say what we think it's worth, put together all the materials to put together an offering memoranda, which is basically just like a book with all the info in it, and then launch that into the market. My role, and you know, like I said, is kind of putting together all those numbers. I also help out on kind of the content creation of the book. And then once that's out in the market, again, I'll go back to Wade here. People like him asking a bunch of questions, you know, asking for more detail, digging in as they underwrite it on their side. So I will, you know, help answer those questions just with the knowledge base that I have. And then once we select a buyer, go through the due diligence process. That's kind of like all the nitty gritty details, you know, like, hey, are all of your elevator certificates up to code? Stuff, you know, like stuff that you don't really even think about. All that stuff. My role as a broker is to kind of just help facilitate that from the seller to the buyer. So basically the seller will kind of send it to us. We'll go through and make sure everything looks all right. And then pass it along to the ultimate buyer. So I kind of see the whole deal process through, I would
say. Yeah, likewise. So kind of my role, I work at AEW in one of our funds. And so my role is kind of the opposite side of Michael's, where he's putting the book together and bringing it to an equity partner or bringing it to a purchaser, we're more or less that equity partner purchaser. So whatever he does on the brokerage side, I then do on the ownership side. So we'll get his OM, kind of read through it, check his assumptions, do our own underwriting, and then from there see if it's something we consider or not. And also with my job too, so with that, we put a bid in, Michael will get a couple bids, we win the bid, then we go through the due diligence process. And then so that's where Michael kicks in again, where he's more or less the middleman. So between us and the seller, or between us as the seller and the buyer, whether it's due diligence materials, getting lease abstracts, getting just different stuff that you have to go through whenever you're acquiring a building. And then in my role too, I do see the deal through where our fund's kind of unique, where our acquisitions team is also our asset management team. So then we go through the business plan of the purpose we bought the investment. So we're closed-ended funds, so we look to get out investments within a 5-year hold period, ideally even less. So say it's a vacant industrial building, right? We'll buy it, and the business plan is to lease it. So we go through that aspect of getting on leasing calls and eventually, hopefully, leasing the building, and then going through the exit process where we deal with someone like Michael again on the sale.
Okay, thank you.
David, you're back. Can you hear us?
Yeah, sorry. I don't know. It must have cut out or something.
No worries. Floor is all yours.
So can you guys talk about like what made you first interested in real estate, and then like kind of what things you learned when you first got on the job that you really thought that was helpful and that you would have liked to know before you got in?
Yeah, for sure. And totally tacky answer, but for me, I'd say the tangibility of it, where I was always a numbers person, loved math, was really good at math, but just didn't really know if accounting, just staring at numbers on a balance sheet was for me. And then so I just took a real estate class at BC and kind of viewed it as, oh, this might be something I'm interested in. Family doesn't have any background in real estate. My dad's an electrical engineer, so maybe that's kind of a pathway where he's doing building designs, and that kind of intrigued me too. But for sure that, and then in terms of the actual job, I would say the more you get analytical skills, the better. There's a ton of people in this industry who maybe don't even have a finance background, and then you can pick up the math. So if you can get into your job running and knowing just the basics of discounted cash flow, knowing how to run through a pro forma or a profit and loss statement. So the faster and quicker you know that, the better you can get off and running on your actual job.
Yeah, I would agree with Wade on the second half of his answer. For me, I was actually, I would say probably a lot of the industry. I had family connections in it. My dad was a real estate attorney, so I was kind of always familiar with just the industry as a whole. And I came into BC as a finance major, knew I always wanted to do business. I had an older brother who was getting into actually brokerage. He was starting when I was a freshman. So just kind of talking about what he was doing with his finance degree. Real estate just sounded like the coolest thing out there for me, and it made a ton of sense. So I was, I consider myself pretty lucky to have found real estate early on and was able to kind of shape a lot of my college classes, like Wade said, taking the Corcoran Center classes, getting involved with the real estate club, et cetera, kind of was able to, continue that interest. And then once started, nothing that we do, as Wade said, there's math to it, but it's not like it's calculus or anything. You use Excel, so you don't actually need to do too much math other than usually some pretty quick mental math on things, just when you're like talking to people. But, as someone said to me when I was starting, it's like nothing we do is rocket science. You can always get up to speed with that. So, being comfortable in numbers, I think is very, very important, especially in our roles of real estate. Just to give something additional to what Wade said, I would say that also you really got to work on your writing skills. I would say that's it's an extremely important part of not only real estate, but I'd say probably any business that you go into, whether that's writing an email, writing part of an offering memorandum, or as Wade would do, writing things for an investment committee. There's constant writing. It's not long paragraphs. It's not theses, but it's bullet points. It's being very efficient with your writing, and getting across information very concisely and clearly. And that's something that, I think is very important.
Very succinct, like business style writing, something that you say the most you can in the least you can. Because when you have your piece of paper on someone's desk, like you're taking up their time, right? So as fast as they can get through and efficiently get through what you're trying to say, is even the better. And coming to real estate, I didn't really even expect to be writing as much as I do. I do that almost as much as I do the actual numbers of things.
Yeah, and going off that, I think there's a new class that's being offered this coming semester called business writing. So I don't know what year you are, but in the future, that'd definitely be something to look into. So
I'm actually going to be taking that course this spring, and I've heard very good things about it. The professor actually shares an office with Professor Chazen in Fulton. So I'm looking forward to that one, and I think it's going to be pretty helpful moving forward.
Yeah. So Max and Nick, how we doing?
Sorry, I didn't realize that my name still says Max right now. I'm going to change that right now. But
how you doing, Ryan?
You guys have any questions for these guys, or?
I'm still following along a little bit, but I know, Wade, I met you back at Sun Life with Phil and
Ryan
a while back. So I want to ask about your transition from Sun Life to AEW and what went into that process and sort of changing over roles in different companies.
Okay, yeah, for sure. So my previous role at school, I was in a commercial mortgage origination group. So we were on the debt side of the business, originating loans throughout the U.S. And I think just the way that business was turning and kind of my own aspect, I really always wanted to get to the ownership, the equity side. So I just started looking out and seeing what opportunities there were. And so this kind of just fell on my feet and saw it, seemed great, and then went through that pathway. But definitely the BC alumni network connections always come into play when you're looking for jobs. People have always been in your position. So if you're cold calling someone, emailing them, they've done it themselves before, and it really helps to have some common ground. So I know part of the reason I got my job now is two of my bosses are both alums. So I think that you guys are grateful and really use that alumni network to your benefit.
And for your job, Wade, at AEW, did they have a requirement or a thing of how many years experience you were supposed to have for the role, or was that something that?
No, it was really 1 to 3.
Okay.
But a lot of jobs too. If you're an undergrad and you seem like and can pick up the speed quickly, then that works as well too. So I wouldn't say if a application or something has a year requirement, don't prevent yourself from applying. I would still look forward to it.
Okay.
Yeah, especially if you have internships or an internship.
But the more, especially in a job transition, the more going into it, the faster you can kind of pick up speed, and the more people will trust you with work going forward. So.
Awesome. Nick, do you have anything you want to ask, or otherwise me and Phil have a few we could throw out there?
I can ask, going off of that thought. First of all, thank you guys for joining us and giving us your expertise. I'm Nick. I know a couple of these guys. That's why they were kind of cracking jokes with me before. Going off of that networking topic, who do you find are the best people to network? Is it more seasoned, veterans in the real estate field, or younger guys our age?
Are you talking about trying to get a job, or once you're more so in the industry?
Well, yeah. So if you were in our position trying to get a job.
I think it's a mixture of the two. You definitely, it's much more approachable to send an email to someone like Wade or myself, and to meet for coffee or hop on the phone, and to talk. And I think, it's especially if you're not sure exactly what you want to do, whether that, even in terms of what the exact role in real estate is, talking to people like us is really helpful, because that's kind of the, for the most part, the entry level job that you'd be coming into. So to really get a sense of what we do is helpful, because that'll allow you to, see if that's the right fit for you. I will say that just kind of seeing the hiring process go through from both your guys' side and now from, being a company that's hiring people, whether that's interns or analysts, I can only do so much in the hiring process. But at the end of the day, like, it's going to be someone higher up than me that makes a decision. So I think it's important to, any touch point you can make, definitely try to make it. You will probably find more success in getting our time than you will,
Totally.
People who are older. But, I think it's important to anything. There's no, it's everything and anything. There's like, just try to network with anyone you can, because you don't know what's going to happen. And I will say, that, those networking calls that you have now in your guys' shoes, will bode you well if you continue on in real estate. I mean, there's someone I'm working on a transaction with now who I remember I called him outside of Rob Sham my senior year trying to get a job, and talked to him, and now I'm working with him, on a transaction. So getting familiarity with people, and getting familiarity with people up and down the corporate ladder, can never hurt.
For sure. I would say, like Michael said, it's definitely so much easier to get our time or younger, like associates or even younger vice presidents' time than the higher ups, just because they have families. They're just that much busier. But end of the day, we're not the hiring managers, right? So if you're comfortable doing that and reaching out to those people, then all the power to you. But in terms of kind of more welcoming, people are going to be willing to take the time and walk you through what they do, and maybe even pass you on to someone else they might know after your call or through that discussion. I think the younger, trying to go after like a younger analyst and associate will help. And then if we deem you a fit and there's a job, we'll pass your resume along, right? So you'll get your resume seen. And then also, who knows, eventually in 2-3 years, we may be the hiring manager and could be looking to hire you. So I think just, you can apply both, but just do whatever you feel most comfortable with.
There's never anyone bad to network with.
Yeah,
I'd say.
Exactly. Yeah. And it's strange how much of a circle it is, right? Or someone like Lane said, someone who you might have talked to your junior year of college looking for an internship, and now you're on a deal with them now. Real estate, especially Boston, is such a small network that
Definitely, those are great points.
Cool. So just to throw in like a little switch up question, if you were going to Eagles Deli tomorrow, what would be the first thing you order?
They had that sandwich with like the
Cape Cod or something.
No, it was like a chicken,
Chipotle
breaded chicken with, it might have been that. That was really good. I like that one, but can never finish it.
I'd probably do just be unoriginal, the New England classic with the apples and the
Eagles Deli.
Eagles Deli. I was thinking of the one lower. Eagles Deli. The BC, the roast beef. Yeah. You got to go to BC.
New England. Yeah. I go with that one.
Okay. Fair.
I messed it up.
All good. Laurentine, did you have any questions? Thanks for joining us.
Yeah, no problem. I kind of missed the first half part. If I can just get a quick update on that.
Yeah, sure. So, I don't know, Michael or Wade, if you guys want to just throw out like a couple of things we talked about already.
Yeah, sure. And I think, I know, some people might have varying levels of familiarity with kind of the real estate transaction process. But I'll loop in, just kind of give a broader overview, because I know sometimes I remember sitting in your guys' shoes, and I didn't understand what everyone was talking about, because it's common language to Wade and myself, but might not be to everyone in the room. So basically, like, we work in real estate, finance or investments, whatever you want to call it, working on, people buy commercial real estate as an investment the same way that you would buy a stock. It's not like buying a house. You're not buying it because you think it's pretty or because, you want to live there or have your office there, whatever. You're buying it for, you're either buying it for the income that it's generating, or you're buying the space that's not there so that you can lease it up and get the income and sell it for a higher price. So for the most part, most real estate investors are, for the most part, I would say, looking to sell at some point. There are some that are always just going to hold on to it and just take, the rent payments every month. And it's, they call it like clipping coupons, taking the cash flow. But so basically, when that time comes, when you're looking to sell or you're looking to buy, you have owners of real estate, such as AEW, where Wade works, and they're owners, but they're also buyers, sellers, same thing. And then you have companies like Eastil, which is just a service provider. We don't have any of our own money ever in a deal. We're like kind of like an agent, like a real estate agent selling a house. They don't own the house or anything. So what we do is when a sale is ready to happen, someone who owns a property will come to us, look to, and we'll kind of, we'll say, hey, we think it's worth $100 million. And we'll do all the math, run out all the numbers, run the model, and that's my role as an analyst, and put together, and that's one side of it, that's the numbers. And then there's also like, hey, what's the market doing? Where is this located? How is this going to perform over the next 10 years? We also put together kind of all that information and then take it to market so that people like Wade, who's in investments, will take that book that we put together, that offering memorandum, and use it to create his own model or use ours. And, vary our assumptions, take, probably a more conservative look. We're in the sales business, so everything's kind of rosy. And, they'll say, we think it's worth $95 million, or we think it's worth $105 million, and they'll put a bid in. We'll run that process through and then ultimately advise our client on who we think is the leading bid. Usually it's the highest price, but when a lot of people are around the same number, sometimes it's other small levers that you can pull. So then we'll, you'll pick a horse and the transaction will go through, and then there's usually like 30 to 60 days of they call due diligence, just trying to shake out all the skeletons in the closet, make sure that Wade will go through and make sure that all the information we presented to him was correct. They'll ask for all the backups, a lot of legal dollars spent there.
Yeah.
And then the deal closes, and Wade, you can pick it up there, kind of talking more from your side.
Yeah, sure. So kind of from there, the deal closes. So I guess in that due diligence process, making sure everything the seller is giving us, whatever the broker is giving us, is trued up and true, factual. And then through that due diligence process, a lot of times we'll also go out and get financing. So if we're buying a $100 million multifamily building, we might go get $60 million of leverage. So that's also closes in the same due diligence timeline.
And we would help them with that as well.
Correct. A lot of times.
That's another service that we would help.
Yeah, a lot of times. Yeah. And then so from there it goes about after managing the building or going through the business plan. So say I brought this up earlier, but say it's in a vacant industrial building. Once it's now ours, once we're the owners of it, we then go through the business plan of actually going and making money or capitalizing on the building. So it's going out, finding a tenant, and then from there deciding on, do you want to sit on it? Do you want to just get the current income stream and clip it and clip the coupons, like Michael said, or do you then want to go out and sell the building? And so as a closed-ended fund, we kind of look to execute those business plans. So if we go purchase a building, lease it up within a year, we'll a lot of times look to get out of that building right afterwards. So then we'd go out and pursue someone like Michael to say, what do you think this is worth? Is this a good time to sell? The broker's just the amount of market knowledge that they have, right? They're not looking at just our building, and looking at dozens, it's not even more, buildings throughout the same market. So they can give you input on whether it's a good time to sell, whether it's good to hold. And then also some other brokerage firms also do leasing. So they'd help us throughout the process of finding that tenant. And then from there, we go through the disposition process where we then sell the building.
And the cycle begins again.
And the cycle begins again, right? Where you'll either distribute that cap, depends on what kind of client you're investing with. If it's a pension fund, you'll then distribute that capital back to the pension fund, and They may keep it and allocate it to different asset classes, or you may just have that money to go reinvest. And so the cycle continues.
So Wade, have you found the E-Still assumptions and their OMs to be pretty accurate, or a little bit highball?
No, a little highball. Depends on the deal. And like our conviction in the market. I know there's been some times where a couple of our partners have had more conviction in the market than the brokers have. But it's their jobs to sell it, right? So everything's a little rosy.
Cool.
We'll cherry pick stats, you know.
E-Still's kind of known for the pocket listing. So like, oh, you're looking to buy, I have the deal for you. And then matching versus, I don't know, like a JLL would just be a mass blast, right? So it's more of a broader market. So I mean, each brokerage firm has a different approach. We work with most of all of them. So
yeah, I mean, it's my job to sell a building for the highest price. And it's Wade's job to buy it for the lowest price. So, you know, it's where that meets. And if Wade and AEW was the only company out there looking to buy, then they could buy it from a lot cheaper. But competition, you know, drives prices up.
Right. Sweet. Phil, do you have any questions?
I've got a question sort of off those points you guys just made earlier. So this would be, I guess, for both of you guys. Wade first. When you guys are looking for a broker to help find you a loan or to sell a building, how do you guys go about selecting a brokerage firm to work with? And do you guys work with the same ones repeatedly, or does it kind of vary deal to deal? And then on the flip side for Michael, how do you guys go about selling your business to these buyers and prospective lenders as well?
I would say totally deal by deal, market by market, right? Where within each city, there's one brokerage shop that does one thing better than this, one that does another, and also relationships. If we've done recent deals with the brokerage team and we like them, we'll go with them again. And then also in terms of the aspect of who we pick to eventually sell the building. Well, if we bought the building from a brokerage firm, they did our leasing, they did our financing, we're going to use them to sell the building as well. But you got to have to execute, right? So we don't have to pick the same brokerage firm as you all for.
Yep, that's true. And, you know, yeah, like Wade said, a lot of it is relationship driven. There are definitely, you know, my boss makes calls and says, hey, remember when we did this for you? And kind of like Wade said, as brokers, we're supposed to be the ones that always know what's going on in the market, you know, across a bunch of different buildings. So it's not too uncommon for Wade to reach out even and say, you know, hey, we really like Boston. We want to buy more in Boston. Give me the data to support us buying in Boston. You know, give me what have other buildings traded here? Like, give me the sense of where the market's at. And that's kind of like one of those free services that we'll give out. And just kind of like, you know, we'll give them out all the stuff that we track. And that's just to kind of foster those relationships. But yeah, you know, when I'll say with financings, a lot of times it's, I would say that is very heavily relationship driven. On the sale front, it's not so much. So what would happen is if Wade was looking to sell a building, they would start a pitch process, and us and, you know, 2-3 other firms would compete for that business. So you put together, you know, a slide deck. One thing I never understood is in college, all of your presentations are always standing up in front of a screen and like pointing like, oh, look here. None of that's done. It's all like everything's always printed out in books and people sit around a table. But basically we put together, you know, this is what they asked for. It's commonly called a BOV, broker opinion of value.
BOV. Yep.
Yeah. So we'll tell them, you know, they'll go out, they'll say, you know, what is it worth? Should we sell now? And we'll say, you know, we think it's worth this much money. Again, I'll use a round number, $100 million. You know, we think you should sell now. Or there are instances when we say, you know, no, you're a 50% leased building right now, and investors don't want to take on the risk of leasing it up because the leasing market's not strong right now. So go out, do more leasing, come back in 3 months, and you will get paid more for that because you did that leasing. Obviously, because it's, you know, but relatively you'll make more money off of it compared to the time and effort and money that you've spent on doing that. Or you know, or we'll say we'll go, you know, go now, and this is our price, this is our support from it. And then this is also we always put out our qualifications. So we say, you know, you're looking to sell a industrial building in you know, next to BC, whatever. Not that there are many industrial buildings in Chestnut Hill, but, you know, we'll say, hey, we sold 5 other buildings over the past 2 years right near this one. And we know what investors are out there. We know, you know, like the ones that are interested. We know what it traded for, what people were kind of like, you know, really digging into. So we have the knowledge. We're the best ones to execute it for you. So that's kind of, yeah, like the price, you know, is this the right time to do it? And then what are our qualifications? They're kind of what we put together. And that's something, it's called pitching. It's the same thing in investment banking. They do it there too. It is kind of a lot of work in a short amount of time. You don't take as deep of a dive as you would when you're actually taking something out for sale. But usually they're kind of quicker. It's a little high paced. Pitch day is always a very stressful but exciting time. You know, a lot of like final tweaks and printing, binding, all that fun stuff.
Appreciate it. Thank you.
Yep.
Grayson, do you have another question? Sorry, I think I might have.
Oh, yeah, I do. I was just gonna, it's kind of like a general question, a little weird, but I guess like for Wade and Micheal, like where do you guys see yourselves in like 5, 10, 15 years? Like, do you plan on staying with E still in AEW, or do you have other like aspirations in mind in the real estate industry?
I'll start off with this one because I would say that my route into kind of real estate is a little bit more typical than Wade's. So Wade kind of, yes, he started off at a commercial mortgage originator, but it's not really that easy to get into the position that he's in now right out of college. Not many firms want to hire people and do the, you know, it takes time to train somebody. It's probably a year. It's taking someone out of school. It's probably a year to year and a half until they start being revenue generating versus just costing the company money. So, you know, brokerage firms are, I would say, a little bit more of a traditional starting point for real estate. And it's the same thing if your friends are, you know, everyone's applying to Citi and Bank of America, Goldman, et cetera. They're not applying to all the private equity firms because you kind of have to do your, you know, 2 years and out. So that was my track. I got into a brokerage company. They're usually the ones that are more willing to take someone on and give them the training. And me personally, you know, I have the option to kind of stay here and grow as a broker or to transition onto the buy side, whether that's, you know, to a company like AEW. Personally, I don't think I want to be a broker at the age of 50. And work my way up that way. That's just my personal feeling. But you know, you can do it either way. I'll say that there is kind of an inflection point at about the age of 30 or 35, where if you're still a broker, it's tough to make that transition. So a more common time is kind of in the time I am now to next 4 years to kind of make that jump. So, you know, I'm considering different options, but yeah.
Yeah, same thing. So I kind of already made a like small career switch. I've always been more of like a go with the flow person. So back in my mind, maybe I have going out and getting an MBA and kind of continuing on with education, or maybe not, right? It's not necessarily not like my job currently necessitates it. And so I think it's up to each person's individual feeling, right? In 2 years, I'm at my level and I think, look, maybe I do want to go to the brokerage side. I might want to do that. But it does get to a certain inflection point, like Micheal said, on one side or the other, where if I'm on the ownership side for 20 years and then I try to go to the brokerage side, that wouldn't gel. So I've just always been more go with the flow, go with your gut, and pursue things from there.
Awesome. Thank you.
What are the unpredictable aspects of your jobs?
When the deal's coming. Like it could be right now, I can get an email and it's write this up for tomorrow, right? And so I'd say just the fastness, you always got to be on your feet, you got to be ready, and you got to be willing to work.
Yeah, I would say it's similar to me, especially with when pitches come in, because those are, like I said, kind of a shorter timeline. So when those come in, you know, they could be a couple weeks, could be just like a week of doing something. And it's kind of like if you already have a lot on your plate, adding something else on, you know, can be stressful at times. I think that's, you know, that's probably the most of it. The other thing would just be any kind of big like moves in the greater capital markets, meaning like the stock market or anything like that, or in politics. If we have a deal that's under agreement and in due diligence, usually it's kind of what happens is you'll put down a deposit. You know, the buyer will put down a deposit, call it like 5% of what they're going to pay. And usually at some point it turns non-refundable. But there's definitely times when someone can walk away. They don't like what they find. Or if, you know, all of a sudden you can't borrow money because interest rates shot up. So it doesn't make sense. Like those are the stuff when you think you have a deal locked up and then it gets dropped, which has not happened to me, luckily. But those are kind of the things that, you know, are a little bit more of like the stressful, unpredictable things in our jobs.
All right, let's go back to another BC question. What was your favorite BC memory?
Probably beating USC my freshman year.
That was fun. That was fun. Yeah. Was I a sophomore maybe? Yeah, that was fun.
Yeah. That was the red bandana game, home game, football game. So that was a pretty good time, I would say. But there are a bunch. Enjoy it.
Yeah, I'd probably say maybe senior week. It's kind of, you guys might not get that, which stinks. But just kind of everyone gets together for 1 week and just last week of college. It's just fun. A lot of good memories, but it's tough to pinpoint a few.
Yeah, we have the red bandana game this coming weekend against.
Yeah, go to Notre Dame. Yeah.
Yeah.
We played Clemson just as tough.
That's true.
So
we almost had them.
Yeah.
But, Caroline or David, you guys come up with any questions in the meantime? Sorry.
What are some good ways to show like an interest in real estate aside from taking a class at BC?
Doing like anything you can that enables you to put real estate on your resume. That's personally the first thing that I look for on a resume. If they're applying is how many, like, what have they done related to real estate? Whether that is a class.
It's such a niche subject that the more that you know particularly about it, the better off you are.
Yeah, I look at that before I look at like GPA. That's not usually like a determining factor for me. And I always just go back to like, usually, you know, someone write an email saying like, hey, I'm really interested in working in real estate. And so I look and I say like, what demonstrated interest have you shown? So yeah, that could be taking a class. It could be being a part of the real estate club. But, you know, even more than just saying like, hey, I'm a member in the real estate club. It's like, all right, what have you done with that? Have you gone on any of the field trips? Have you attended these? Like, put this stuff on, like attended Q&A sessions with analysts. Like, that's the stuff, because this is kind of the reason why I really liked real estate too when I was you know, trying to find a job, is that like everyone that was chasing investment banking or whatever, it's so competitive, and real estate I thought was just kind of different. So it's much easier to differentiate yourself. So like, I mean, if you can get an internship, before whatever you're looking for, whether that's a full-time job or, say it's before your junior year, sure, that's great. But like anything you can do that just has real estate on it. Even if it's something that, and if it can't be on the resume, have talking points for when you're talking with someone. Say, hey, like I've gone out of my way to study it. I know at least like one really good website, Adventures in Commercial Real Estate. I think the website's actually Adventures in CRE. But that's some guys out of that work at Hines, I think. And they put on YouTube videos of like, how do you underwrite? And they're really helpful. One of the most complicated things you can underwrite in real estate is a joint venture waterfall, what they call it. And it's basically just like when you have partners in a deal who aren't equal interests, how does that money get paid out? So that's like, and it's not in every deal. But there have been times when I've been sitting in my job and gone to that site to look it up. So, I think like even something like that and say like, hey, I'm going out of my way to learn these Excel skills and learn these real estate modeling skills. Just any of those talking points like that is super helpful, I think.
I would also say just stay well read in terms of like just local news, national news, even if it's not even real estate specific, because a lot of times during the interviews, your conversations then get a little bit not off track, but kind of hit back to things. And the more just worldly financial markets points that you can point out, I would say the better. So if you don't subscribe to the Wall Street Journal or anything like that, I'd say do it just to stay well read. I actually, for a couple of when I was in my interview process as like looking at higher level analyst and associate jobs, that's one of the first things they said is like, oh, like what's something you've read in the news lately? And it throws you on the spot, but it's just something that if you can't say something, then how is this person going to be able to go out and do research, be able to put valued opinions on different things? I don't know. I'll say that. Yeah. And also,
sorry, go ahead. Looks like you cut out. I would say also, wait, I think you cut out there.
Okay.
I think you cut out there. But I would also say like anytime you're either interviewing or just catching up with somebody, always research the firm. And by that, I mean, just like do Google searches, like look up the firm. What are they buying or what are they doing? Any deals? Like, even if it's not going to come up in the conversation, it will help you ask better questions or at the end. And the best thing you can do is if you are aware of someone, of deals that someone's done, and even better if you know that they were on that deal team, which sometimes is hard to find out. If you can ask, like intelligent questions of like, hey, that, yeah, you guys, I saw in the news that AEW bought their first building in Seattle. Why are you guys looking at this market? Like, why are you making the entrance there? That's a great question to ask. And when I'm talking with someone, like we get calls, I get calls a lot from students, both BC and non. And if someone has done even just the 5 minutes to Google something, like I immediately, like that will stick out in my mind way more than someone's like, I'll go back to GPA. I hope that answered your question.
Yeah, it did. Thank you. And if I could just ask a follow-up, since you guys brought up the interview, I know like in IB, a lot of it is really technical, but in real estate, is it more behavioral or more technical when it comes to the interview process?
I would say it's much less technical. There have been very few interviews that I've had where I've been asked technical questions. You should 100% know what a cap rate is. That's like the one basic real estate fundamental thing that you should absolutely know what cap rate is and what it represents. And that's like the formula, know what it represents, and that's something you can easily Google. When I'm interviewing people, like I'll ask that one it's not a make or break question, but it's more so just to see like how aware someone is of what real estate valuation is. And then I'll also ask like maybe like if you had $100 million to invest, what would you buy? Just as like kind of a fun one, just to see what people's general ideas of the market. But overall, I would say that real estate as compared to like investment banking is way more about the person and who they are. And if they're gonna, you know, if they seem like someone who seems smart and is gonna be a quick learner, and is going to be sociable. It's a very social business, especially in brokerage. Like our job is to have relationships with people and be able to talk to people. So that's hugely critical. And like I said earlier on, like nothing that I do is rocket science. So you'll be able to learn all the technical skills and people know that. So really just showing that you're like a hard worker and you're someone that like that the person looking to hire would want to work next to, I think are way more critical.
Definitely. I mean, you spend more time with your coworkers than your own friends and family a lot of times.
Yes.
Like 8, 10, 12, 15, whatever hours a day with them. Not now with COVID and stuff. Normal, for sure.
We're back in the office.
Yeah, we're half and half. So I really go as I please. So probably twice a week I go in, but it's not nowhere near as technical as iBanking, or I think people had like binders. There was like the iBanking club and they had binders and studying all the things. I don't think it's anywhere near as technical, but it still is for the most part. You have to know how to property, know how to run yourself through a DS, and know different metrics. Like what's your cap rate? What's your return on cost? How do you get there? What's the cash on cash yield? Aspects like that, because some firms do, some firms don't. Do have modeling tests. So just be familiar and work your way through it. And they're not looking for you to pass it, but at least have a fundamental knowledge of how to value real estate.
That will be something that they'll let you know if you have a modeling
yes,
test.
They
that
won't
be a surprise.
Correct.
I had a modeling test for my job in Excel, but that was all. I was also coming in as an analyst, not as an intern. And I had previous internship at a brokerage firm, so they kind of expected that I have some sort of knowledge.
I have a question about modeling tests. So I've done one before, but like, I've only done one of these ever before, but like, what's the range, like what you expect to see on a modeling test normally? Are they just kind of throw your basic sort of like pro forma, like writing like a loan and like a few other basic things like that, or like how like intense do they get for like an analyst role?
I'd probably say the hardest gets to like doing a waterfall cash flow, and that's just different yield hurdles. So say you have a joint venture partner, right? You can call it one person puts 90% equity, the other person puts 10. Well, so the returns get hurdled at certain rates. So once you hit a 10% IRR, it's not a 90-10 split, it's an 80-20 split. And once you hit a 15, it's then a 70-30. And so your cash flow, you have to create a cash flow that pays it out that way. That's the most complex. And as a first-year analyst, I don't think a lot of firms would expect you to do that. So that's probably as complex as it goes. But whatever math you guys do in your real estate classes, just be familiar with that. I even forget what we even did, but like be able to put a simple DCF together, put together sources and uses of a budget and things like that. No difference between a hard cost and a soft cost. And
I would say that like it's tough to do modeling of pretty much every property type except for multifamily and maybe hotels, and not in Excel. So in Excel, like that's how we model an apartment building, is in Excel. So usually like my test was, you have like, here are some assumptions. It's a 200 unit apartment building, cost, rents $2,500 a unit per month. Expenses are, $1,500 a month, growth rates 3%, like put it out and solve for like a 4% cap rate on the purchase price. Or and then sometimes you'll have to layer in debt. That's the most complicated, I would say. But yeah, like getting a waterfall test would be something that I would be faced with if I was in a private equity interview, because that's a private equity thing.
Yeah.
But you wouldn't really face that. I don't know anyone that would give it to someone in college. And my test was, they had a ton of things that you had to answer and not enough time. So it was like not just what you scored, it was like how far you got through it more so, I think. I've never been on the other side of it. We've just hired our interns, and we don't give our interns modeling tests. So I've never seen it from the other side.
Thank you.
Michael, back to your point. Sorry.
Go ahead.
Go ahead. No, go ahead, Caroline.
Okay. Are there any specific like databases or programs that you should be familiar with before going through the interview process, such as like Moody's Analytics or anything?
A lot of them you need a subscription for. So like I use CoStar, RCA, CompStack, Axiometrics. But those are all firm specific, right? Where the firm will have and then all the membership. I guess Argus, if you can take an Argus class, would be great. Besides that, Michael, can you think of anything?
Yeah, no, that's pretty much it. Argus is the biggest one, and that's the only one with like a learning curve. The other ones are just like data websites that we are all born, relatively, before or after 1990, so we can pick it up pretty quickly. But Argus is the one, like if you can, I assuming you guys still put on that event of training. I don't know if you do now with COVID, but
yeah,
you can
probably
take
gonna
that
be virtual this year.
Yeah, if you can take that and put it on your resume, that's also a huge key. You will not become an expert in a weekend at all, and you'll probably forget everything you learned by the time you start your job. But just having like that beginning introductory like knowledge of it, and to be able to put it on your resume, that's the biggest one. So if you can get exposed to that, not everyone has, and that's, I would say, a big differentiator.
Okay, thank you.
Mm-hmm. And Excel is huge.
Yeah.
And that's something that everyone can do. So
yeah.
Definitely, there's tons of online resources for free. So take it as many of those as you can, and be able to speak about it. Phil, do you have a question?
Yeah, sure. You mentioned that one of those interview questions you like to ask is how you'd invest $100 million. So how would you do it right now? And same goes for Wade. What property sectors are hot right now? Where do you want to put your money?
Yeah, I would say the two hottest property sectors right now are industrial, and then probably life science, which is more of a niche asset class in the office, the bucket of office. So life science is really hot, and we have Cambridge right here. That's something I didn't understand when I was at BC, is that Cambridge and the stuff in Kendall Square, surround like next to MIT, is some of the hottest real estate in the world.
Yeah.
Those are like some of the smartest people also in the world there. And if there's going to be a cure for cancer, or, I know, what is it, Pfizer just came out with a vaccine, but like all that stuff is being done in Cambridge. So the real estate's very expensive for that. I couldn't buy much with $100 million in Cambridge. So I would look at the kind of burgeoning market kind of stuff around research, such as by MIT is kind of the anchor there. And then industrial, with everyone buying everything on Amazon and everyone wants their stuff, 2-hour shipping. That last mile real estate's really hot right now, and you could probably go out and buy a lot more with $100 million. Also, a good answer if you get asked that is is to just bring in the concept of, just because you have $100 million doesn't mean you can only buy $100 million worth of real estate. You can partner, you can put on debt, you can probably make it 5 times that amount. So that's, if you just even bring in that concept, that will differentiate yourself a lot. And I had one kid once answer that he would buy vineyards in New Zealand because of global climate change. It's going to have the same climate as Bordeaux, France. He was a Cornell hospitality kid, though. So that's kind of where his brain is at. But interesting. Take into account. There's no wrong, and there are some wrong answers.
Yeah, so going off that, I mean, industrial by far is the hottest property sector, but is that a great time to invest in it, right? Where it's an awesome time to own it. It's tough to get into it now where prices are. So maybe if you could find a development site and develop that, would be good. But this late in the cycle, how can you get financing for that, right? A lot of banks are kind of shoring up and don't want to go into development opportunities. So one aspect that I actually really like, and we looked at a couple deals, is single family for rent communities. So a lot of it is in down south, so like in the Beltway. So like say like South Carolina, for example, outside of Charlotte or outside of Raleigh. It'll be a community of 200 houses, really close together, but they're single family homes for rent. And so that adds a differential maker in terms of it's individuals who cannot necessarily afford a down payment for a house or don't want to move into a house, or say if it's an older couple who sold their house and still want to have the feeling of being a home but don't want to be in an apartment building, they'll pay a rental premium to live in a single family standalone home. So I think for me, that's one of the most interesting product types, and also one of the hottest too. There's a lot of REITs out there that do like invitation homes and things like that. So I'd say something niche like that. And also on the flip side too, where a lot of current owners are distressed. So look at maybe buying a mortgage on an office building that could be vacant and looking into a business plan of kind of resizing it and trying to go through releasing it. So whatever your answer is, be creative with it. I think, like Michael said, the vineyards, people remember that.
Yeah, just have the best way to answer those questions is to just have some backup to your reasoning, even if it's wrong. Just having like being able to, and especially if you're going into a job like Wade's where you're on the investing side, having like an investment thesis where you're like, I would buy this because of these factors. Like that's the best way to answer it, despite what your answer is.
Thank you.
Awesome. Well, I think we've come up on an hour, so unless anyone has any final questions they want to get in there, we'll let these two guys go. Otherwise,
If you could rewrite your BC experience, what would be an activity that you would do?
If I could rewrite it, what would I do?
Yeah, as in like wipe everything out like from your past and you can like start over.
What would I do? I would say definitely get more involved within different clubs and organizations. I mean, within the real estate club, but that was really it. I would say get involved as you can, meet more people, meet as many people as you can. So I'd say just get involved.
Yeah, I was pretty happy with my experience. But I would say I would have gotten into Boston more. That's something I didn't really do till my senior year, and I get that there are some activities that have age limits that enable you to go in your junior and senior year. But that's something that I would definitely like. You know, Boston's a pretty cool spot, pretty young spot. Like if you have time, take the T in or get an Uber and just go downtown, walk around, experience the city. Something I do a lot now, living here in Boston. But, you know, especially if I had moved away, I think that's something that I would have regretted not having done more of.
Yeah, I would definitely kind of echo that. Get off campus, right? BC can kind of be in its own chamber up on the hill. You don't really get to experience Boston. So I would definitely recommend previously be like going to Red Sox games. Maybe you can still go to the MFA. You can still go to the Boston Public Library to study. So definitely just get in the city.
awesome. I think that's a good one to end on. So with that, we'll let you guys go. Thank you so much for the time. We really appreciate it. This was super helpful. And if it's right with you guys, do you mind if we just pass along your contact information to people that are here? Or?
Yeah, for sure. Not at all. And any of you guys feel free to kind of contact either of us, I guess, if you guys have any other questions.
Yeah, we hire interns every year. This one's been a little delayed just with COVID, but that hasn't taken place for this upcoming summer. I don't know what grade you guys are all in, but we're juniors. So, you know, shoot along your resume if you're interested.
Yeah, we're pretty ad hoc, like role by role if something opens up. But just if you want, shoot me your contact information and we can stay in touch.
Sweet. Thank you so much, guys. Take care.
Thanks for the questions, guys.
Awesome. Yeah, see you guys.
Thank you.
Bye. Good luck.
Thank you.
I think that went very